What a tough day it has been for the markets. Sell-off right from the get-go continues, and we're looking like we're in for a very tough week. On this special show, we're aiming to break down the key reasons for the kind of market sell-off we're seeing and really tell you what you should do in the days to come. But let's start with a recap of the kind of day, and it's been a manic Monday by all reasoning, Neeraj.
Yes, indeed. So, tough day for the markets for sure in today's trade. You argue that maybe there was off the lows of the day, but be that as it may, we ended well and truly below the 24,100 mark, and in fact about a few points below 24,000 as well. So you could argue we've closed around that level. Broader markets saw an even stronger hit, with the micro cap index being down nearly 1.7 or 1.8%, and the market breadth nearly 1 or 2:7 in favor of the declines. And across the board there was selling. If you just look at the Nifty 50 gainers and losers as well, save for a Mahindra & Mahindra and save for a couple of other news-making stocks, a clutch of others corrected. Reliance, HDFC Bank, ICICI and Axis Bank. And remember, Bank Nifty was not even the principal culprit at the start of the trading day. There are stocks like ONGC, which have corrected quite viciously. BPCL has been down in trade from that oil and gas space. So a clutch of those large cap names have looked very, very wobbly in the session. The two-wheeler names in Hero and Bajaj Auto too have wobbled. I look at the broader end of the spectrum too. Yes, there were winners, and there were a few stocks which did well. So the BSE 500 winners and losers list, if you just look at that very quickly, you will see what I'm telling about. There are winners. Fine Organics had a good move today. Galaxy Surfactants and Privi Speciality and a few others had a decent outing as well. Aegis Logistics about 3.5%. There was First Source, which gained another 5% in trade. But the gashes were very strong. Polymedicure, Vodafone, Angel One, CESC, PVR, Inox being hit about 5%. It's a wrap on the knuckles for a lot of these stocks. So net, a tough outing. The new kid on the block though recovered a lot of lost ground. Afcons Infra, after starting off the day in the red, ended the day marginally in the green, and maybe that is a bit of a respite for that. But otherwise, it was a day that's best forgotten from a bull's perspective.
Definitely best forgotten. Unfortunately, this might not be the end of the pain, because if you look at the key factors that are causing the pain in the market today, it's not something that could disappear in the next couple of days. In fact, you might see a bit of a tough week, and these are some of the reasons. For one, you have earnings which have not really been the best. 34 out of 50 Nifty companies have announced results so far. 10 have beaten estimates, 13 have met, while 11 have missed expectations. But even in the broader markets, by and large, company results have not been up to the mark in terms of how much the stocks have run up. So on the valuations criteria, they've fallen short. Reason number two, of course, is the US election. That is the big one. On the 5th is when voting starts. We'll have a clearer picture perhaps by 6th or 7th morning. And this is a close fight. Will it be a Trump victory or a Harris victory then becomes very, very important from the market's perspective. Markets actually penciling in a Trump return for a second term. Reason number three for the markets to feel this kind of heat, of course, is geopolitical concerns. Iran's Ayatollah has announced that they would hit back at Israel soon. Crude prices have been rising. OPEC Plus has pushed forward their production output increase, and crude prices going higher is never good news for India. FIIs, of course, is the other factor. They've continued to sell over 1,20,000 crores just in the month of October, and nothing seems to be changing in November either. Remember, China is having a series of very crucial meets this entire week, where they're going to be talking about measures to prop up their economy. If those are very, very positive, you could see more foreign money heading there. But let's get a view from some of our speakers today. Mihir Vora, CIO of Trust Mutual Fund, joins us today. I'm also joined by Deepak Shenoy, founder and CEO of Capital Mind, now on the show. Welcome to both of you, and thank you so much for speaking with us. Deepak, let me start with your take. Did you expect the ferocity of the fall today?
To be fair, Tamanna, I think the ferocity is only because we have looked at it from the Mahura trading prices,
Yeah.
which were abnormally high, I would imagine, because no FII participated, everything went up. If you count from the day
Thursday.
before Mahura
Yeah.
trading, the stocks are down less than 1%, so it's not meaningful to speak about. We're not even down 10% from the top. So yeah, I mean, it's nice to know that the stocks have fallen, but really not meaningfully enough for us to, as a market as a whole. But individual stocks have corrected 25, 30%. So they give you a chance meaningfully to kind of participate going forward. I think we are going to be in a situation where uncertainty as it evolves, whether it's a US election result or what happens with Iran, Israel, as certainty starts to come in, I think markets will get more stable. We've seen some record FI selling, and even then we're down less than 10%. So I'm actually surprised it's such a resilient market so far. And I think given we're just seeing inflows everywhere, we're going to see a fairly record set of inflows even into mutual funds in the month of October. So it's going to be, I think, it's going to be very dichotomous. I don't think this is a meaningful enough fall for us to feel miserable about. It's just that the numbers from Mohra trading day looks bad. That's all.
You know, maybe I get your point, Deepak, that if I count from Thursday, maybe it's not looking that bad. But the fact is that there seems to be just no support coming in. And if you see the way the index has behaved, I mean, the other way to look at it is also the wide breadth of the fall. It's not even few sectors or few stocks, it's across the board. What do you think are the primary reasons?
Again, I think part of this is, I mean, there are three questions to it. First, the geopolitical uncertainties worldwide, specifically Israel, Iran, and the US elections, because the two candidates have such widely dichotomous policies that, almost like, oh, we're going to have to do completely different things if X comes to power versus Y, and based on their actions thereafter. So that is one challenge. The second one is that FI selling has been unabated. So to the extent that I feel we're resilient, I feel we would have fallen a lot more had we sold 120,000 crores in any given month, maybe 5 years ago, compared to what has happened right now. So a large part of the rally, the fall, has actually been taken up by domestic investors buying, and domestic investors include mutual funds and institutions and so on. The third part, I think this is more meaningful to us, is that earnings have not come in a very interesting fashion. Till now, whatever nifty results have come, even the top 500, we're talking about a 10% earnings growth year on year for the September quarter, when we should have had a slightly better number. Of course, a lot of results still to come, so we can't really pass judgment right now. But till now, results, especially in the financials, especially in consumption, in retail, we have not seen something major as an uptick. Auto numbers are also not as strong as one would have made them out to be. Maruti was flat, Tata Motors was flat. I think M&M did quite well in terms of numbers. Two-wheelers have done reasonably well, but you don't have that kind of euphoric jump in those numbers that we would have expected because of the Diwali month. Last time, I think the Diwali month was November. This time it's October, so you should obviously see a much higher jump. So I think that way, as we've seen some kind of disappointment. So these three factors have probably led to some kind of weakness. But again, is this weakness less than 10% from the top? Is it even worth talking about less than 10% of the top? I mean, I'm just a victim of history. So 10% used to be the point at which you'd start getting worried, and now we seem to be worried, even much more worried even before that.
Some of those people who are worrying, Deepak, are victims of recent history, wherein a 4-5% drop has been bought into very, very quickly. So, that's the point. Mihir, I'd like to bring you in this discussion. Granted, 10% in the past wouldn't have worried, just that the last 4 years, we're not used to such moves as well. And this 9-10%, cool. I agree with Deepak, it's not 10%, it's slightly less than 10.
Yeah.
But this corrective move has happened from September 26th or thereabouts, when we were sitting pretty at 26,200 or thereabouts. Now, do you think that this one-way slide is overdone, or was this warranted, and can it do more?
So, Neeraj, again, Tamanna, I think we discussed it last week also. First is that it's not really a correction, frankly. The Nifty is something that we are obsessed about, but the Nifty is down about 9% from the peak. But if you look at the small cap index, which is the much wider market, that's hardly down 6% from the 52-week high. That's one data point. Second is, let's put the perspective of today's fall. Let's put into perspective today's fall against what happened last week. Last week, the Nifty was up 0.5% total, whereas the small cap index was up almost 6%. So, it's just giving back a little bit of the gains of last week. It's about 6% down from the 52-week high. So I really don't think it's a topic worth worrying about, frankly speaking. Second point, which I would like to mention, is that our obsession with Nifty is a bit of an issue, because now it's more and more not representing the domestic economy. If you look at the Nifty components, the largest is financial services. Let's put that aside. But then we have big absolute earning contributors like energy, oil and gas, metals, cement, IT, which are all globally linked. The thing is that China, the biggest consumer of commodities, is slowing down, and commodity prices have been weak. To that extent, they will put pressure on the Nifty earnings. In fact, we all know that Nifty earnings overall in this results season have been cut. But if you analyze why the Nifty earnings have been cut, earnings estimates for FY25 and FY26, why they have been cut, a large chunk of the cut is happening because of these global sectors. So there is a little bit of disconnect growing between the Nifty representing the Indian domestic economy and the wider market. So really, if you look at the wider market, small caps, mid caps, nothing to worry about. Nifty fallen about 8.9% from the peak. It's been a one-way slide probably, but I don't think it's anything that we need to worry about so far.
What we've established so far in the show, it's not that much. It's looking sharper than it is because Diwali Muhurat trading was a little optimistic. And don't worry so much. It's not that far away from the peak. It's not that serious. So then let me ask you this, Mihir. More to come? More to come, and would you be deploying right now?
Certainly, as you know, we launched a new fund which just closed last week. So we have some ammunition to deploy. I'm quite happy about the fall. So that's one. The second is the market is also probably globally taking a bit off the table for the outcome of the election results in the US. Nobody likes uncertainty. So when there is an event in the next few days coming up, probably just want to keep some dry powder. And that's what things are happening. Incidentally, if you look at Asia, frankly, it's not down that much. US futures are also not down that much. I think this was more of an India reaction to, as we discussed, the Muhurat trading, and probably the fact that small caps did run up very sharply in the past week.
So good timing for you, Mihir. I find that interesting. As someone who's running a fund, sitting with capital right now, and the opportunity to give good returns because markets are dropping. What are you looking at? What are you finding interesting? And Deepak, I'm going to come to you on the same question in just a bit. But first, Mihir, let's get your view.
So it's the same themes that we've liked for quite some time. The domestic themes, basically, whether it's a premium consumption or financialization of savings, which means the non-lenders, the physical asset creation themes like cap goods, infra, real estate, and construction, those kind of themes, including the sectors where the government is focusing on, like power, defense, railways. So all that bunch, and the new age companies, which of course are disrupting the existing businesses.
Deepak, if I were to ask you, which are the spaces that you're finding most attractive? I mean, look at what's happening with banks. And their numbers were not that bad to warrant this kind of a drubbing. You're looking at buying right now. Would you look at large caps? Would you look at banks? Would you look at private banks?
So, to be fair, Tamanna, I think we've looked at the banking and the financial system in a dichotomous way. There's the financial infrastructure players, we love them, whether it is the exchanges themselves or the companies that work closely with the exchanges, the depositories or some brokers and so on. I think they present a very interesting picture going forward. From a lending perspective, avoiding the non-bank financial companies that are lending directly on unsecured personal loans, simply because I think there's a lot of stress in that area. It's going to take about another quarter of really, we've seen the numbers. The stress is really, really bad in some of them. We're talking 8 to 10% NPAs on unsecured personal. And I feel this is going to get worse before it gets better. So stock prices are going to correct more meaningfully at some point to offer a better risk reward for us getting in. Private banks, large private banks are where the interest is because they're more diversified. They have still relatively strong CASA ratios to keep their cost of funding low. They do a lot more secured and corporate lending. So I think that presents a attractive proposition for us. Not getting into the PSU bank pack yet. So overall, financials is a dichotomous thing. So large lenders, financial infrastructure players, but not the non-bank lenders who are doing unstructured or unsecured or microfinance. Having said that, I think financialization is a solid theme for India. We've not seen anything yet in comparison with what we are likely to. Our level of financialization is very small compared to the West. And we're growing really, really fast to the point where our payment systems are way better than most payment systems around the world, and they're only increasing every month. I think last month was 20 plus lakh crores on UPI versus credit cards
what is the equity play on the financialization theme? How do I play that in the stock market right now?
So you look at the infrastructure, financial infrastructure, multiple areas, right? So you got savings, investments, and credit, right? So you got at some level, payments, investment, and credit. So each of these areas is seeing will have different players that play in, but some parts would be for investments. You'd have a dichotomy between insurance and investment in the first place because they're more interlinked in India. So you got players in all of them. Within the investment space, there are the direct, say a mutual fund AMC at one level, or depository at another level, or a broker at the third level. All these play part of financial infrastructure for investment. For banks, which are straddled across all three, the lending part would be the most exciting or growth-oriented part, but there are lots of areas in fees, investments, and in payments where banks can actually add a tremendous amount of heft. So these players, I think, form parts of the financial infrastructure of the nation. And based on how strong this sector gets, you can actually invest in cross players. People in e-commerce, for instance, benefit from a large payment ecosystem. They're not financialization directly, but they're downstream benefits of financialization that take precedence. We've never had a logistics infrastructure as good as we have today, but it's probably going to get 2x or 3x better in the future, given the downstream elements that are happening in infrastructures, in capex infrastructure, in roads, ports, airports, and so on. So I think, it's a broader play. The two things that I would do separately in India also is we're focusing a lot on energy independence. So going away from crude as the primary source of, say, transport fuel, and also, getting into nuclear, getting into hydrogen, getting into solar and wind and the power ecosystem. And also in import substitution, where instead of encouraging India to import and relabel and sell to Indians, we're saying manufacture here. So make for India rather than make in India. That's the theme that we'd focus on. Financialization is a broad theme. I think you'll have a lot of players in the system, and sometimes it's just the fact that some companies themselves have more value from their investments than they have from their primary operations. So even that can be a financialization play.
Okay, Mihir, what are the big themes and sectors that you would look like? I'm sure you'll not give me any stocks, so anything as specific as you can will be useful to our viewers right now who are wondering what's happening. Maybe people are worried. They're wondering whether to continue their SIPs. They're waiting maybe for a further knock before investing lump sum and thinking of what to do and which sectors to look at.
Certainly. So, as I said, one of the things that we really like is premium consumption. So whether it's higher end houses or auto or travel and tourism, higher end cars, all the items of hotel, for example, all the premium items are still seeing good consumption. The festival season demand seems to have been okay. There were some concerns in the couple of weeks ago about slowdown. but now there are mixed reports. There seem to be some pockets of good traction as far as festive demand is concerned. And once we know the full extent of the sowing season and the harvesting season, we'll probably get a better hang on the consumption theme. So I think premium consumption continues. Deepak already mentioned a lot about financialization of savings, lenders and non-lenders. So we do like lenders because they have become cheap, especially the large private sector banks. They are quite reasonably valued, and there are not major concerns about unsecured loans, etc. in the large private sector banks. Those will continue to like. But the non-lenders, as Deepak mentioned, which includes insurance, wealth management, asset management, broking, capital market, registrars, distributors, financial distributors. That bunch, I think, will continue to grow secularly. And as we know that most of the plays in these segments happen to be the mid and small cap space. So when we talked about the broad market, that's what we are talking about. We also like chemicals. Because I think Make in India is a big theme, Make for India as well as for exports, China plus one. And more importantly, a lot of the leading companies have been correcting quite sharply for the last 1.5 years with good reason, because margins have come down as China came back into production. But I think they have set up large capacities, and now we are betting that even if margin expansion doesn't happen, there'll be a lot of volume growth. So that's one big theme that we like in the chemical space. Second is pharma, not only generic, but CDMO is a big play for us. I think that's a theme that can be a multi-year opportunity for Indian pharma, almost supplementing the fact that, or even offsetting the fact that generic pricing has come down and margins had come down. But I think this can be the next growth driver for the Indian pharmaceutical industry. Third is mid-cap IT, niche companies we like, and the whole gamut of the infra space, defense, railways, power sector, including renewables and non-renewables. The entire bunch of physical asset creation, as I put it, which includes cap goods, construction, infra, and real estate. We continue to like. So that's where we are playing at.
Okay. As we wrap up, and a lot of ideas there, Mihir, thank you, I appreciate, because this is what, viewers really want to take away. But as we wrap up, the big factor in the next maybe 72 hours or so is going to be US elections for global markets. I'm just wondering both of your views on whether you think it's going to be the big push or the change for Indian markets as well. Mihir, and having said that, who do you think will win, Trump or Kamala?
Right now, it looks like even Stevens, so not really taking a bet there.
Yeah.
But my guess is that Trump will be long-term good for India, because I think India-US relationships can probably grow closer in the longer term. But in the shorter term, there'll be lots of moving parts, because Trump is talking about corporate tax cuts, which means that US corporates will improve their profitability, increase investments, etc. There might be some further money flowing away into US, because that's really been a big magnet of. So that's one. Secondly, if Trump talks about high tariff barriers, then China will have a problem, and they might start temporarily dumping stuff to the global market, which means commodities and other exports can really get cheap, which is a mixed bag, because we also import commodities, and plus other manufactured items can be a dumping. So I think long term is good, but short term may be a volatile. If the Democrats come in, then probably it will be more of the same.
So, Deepak, a Trump win, say at the end of this week, if Trump wins, Fed cuts rates 25 basis points as is expected, and nothing major out from China, more changes on the Indian market front as well?
It depends on what he does. If he starts increasing tariffs, I think there's going to be some kind of worldwide repercussion on it. But I think that will only benefit India because, we're already subject to some of the largest tariffs that the US has. Our textile tariffs are one of the largest already. So, and we don't export that much more to the US in terms of goods, a lot more in terms of services. But I expect that, regardless of who comes, there's going to be some drama that happens, whether it is an increase in, the war contours in the Middle East, which I think has been paused primarily to get over this election results in the US, and it could get more aggressive. So I don't think it's necessarily bullish in the short term. Though my feeling is that someone like, I predicted in our annual, we predict once a year. So we wrote a prediction that it's most likely going to be Trump. But that's just, 50% chance either ways. And plus I have
That's the
very
best.
little.
Those are the best predictions to make, Deepak.
I know. I mean, you just say something.
You're venturing where psephologists dare dread. So, so 50%.
Yeah, no, I think if you're going to predict, you might as well predict something that can be answered with a yes or a no. But I don't think this is going to be meaningful for India. If there's going to be trouble geopolitically that continues, that's going to be. But I feel here that there'll be a lot less to talk about from an election perspective. It's so entertaining, the US politics. And I feel the GDP of the US will just come down after the elections because there's not so much, squirrels and whatnot. So,
Yeah, entertaining it is. But then we have all of our own state elections to talk about. So we'll never run out of things to talk about in that sense. But thank you so much. It's been fantastic chatting with both of you, Mihir Vora, Deepak Shenoy, there on the kind of Monday mayhem we've seen. Stay calm is the large message coming out. A lot of great stories is there still. Fundamentally, nothing much has changed for India. Maybe a bit of a turbulent week right now. Wait and watch for the right opportunity. Well, that is a wrap on this special show. Thank you so much for joining us. But stay tuned. A lot more coming up on the other side on NDTV Profit.